A lot of us love the idea of buying a shiny new car that smells like leather and plastic, that feels fast and modern, and has all the latest features. But the truth is that new cars are one of the worst investments you can possibly make. So let us unpack this concept and explore why new cars are a terrible financial decision, and how you can use this insight to save tens of thousands of dollars over the course of your life. Let's get started. Alright, so the first point I want to make is that a new car is one of the worst investments you can make, because it immediately begins to lose value from the moment it has driven off the lot. You see, when you buy a new car, it loses approximately 20 to 30% of its value right away, and after 2 years, it loses an additional 63% of its original value. After 5 years, the average car is worth just 43% of what you paid for it initially, and after 10 years, only 13% of the original value remains. The second reason new cars are such a bad investment is because they force you to pay interest to the bank or lender over a long period of time. You see, if you finance the purchase of a new car, you will likely pay several $1,000s more than the actual cost of the car simply because of the interest expense. For example, let's say you buy a new car for $45,000 and you finance it over 5 years, which is 60 months at an interest rate of 5%, which is the current average. Now, the third reason new cars are such a terrible investment is because they distract you from making good investments in other areas of your life. You see, when you spend a lot of money on a new car, it limits your ability to invest in things that actually grow in value over time, like stocks, real estate, or a business. For example, let's say you decide to spend $500 a month on a new car payment. If instead you took that $500 a month and invested it in the stock market at an average annual return of 7%, you would have almost $200,000 after 30 years. The fourth reason new cars are such a bad deal is because they encourage you to buy extra things that you don't really need. For example, when you go to the dealership to buy a new car, the salesperson might try to convince you to buy extra options like bigger wheels or a premium sound system, even though you don't really need them, and that's okay if you have the money to spare. But studies show that people who buy new cars with loans are more likely to be upside down on their loans, which means that they owe more on their car than the car is worth, and they're also more likely to default on their loans. Why? Because they end up spending more money on their car than they can afford to spend, and then they can't make their monthly payments. The fifth and final reason why new cars are a terrible investment is because they cost more to maintain than older, cheaper cars. And if you have an accident, newer cars are more expensive to fix. Plus, if you buy a new car, you'll have to pay higher insurance premiums, which can add hundreds of dollars to your monthly expenses. So now that we've established that new cars are a terrible investment, let's talk about some alternatives. First, you could buy a used car instead of a new car. A used car will usually cost less money. Second, you could lease a car instead of buying one. Leasing a car means that you pay for the car over a set period of time, usually between 2 and 4 years, and at the end of the lease you can either return the car or buy it for a predetermined price. Third, you could buy a car with cash instead of financing it. Buying a car with cash means that you won't have to pay any interest or fees to a bank or a lender, and you won't have a monthly car payment to worry about. There are many benefits to buying a car with cash. First, you won't have to worry about getting approved for a loan or paying high interest rates. You also won't have to worry about getting upside down on your loan or losing equity in your car. In addition, you can negotiate the price of the car without having to worry about getting pre-approved for a loan. You also won't have to worry about selling the car later on because you will always be able to sell it for cash. Finally, you won't have to worry about the car being repossessed because you still own it outright. Now, before we move on, let's talk about something that you've probably heard before. You've probably heard that the best way to build wealth is to save money and invest it wisely. But what does that really mean? Saving money is simple. Just put some money aside each month and then invest it in something that makes you money. Investing is a little more complicated, but it's not rocket science. To start investing, you need to find a good investment account and then open one. You can do this online or at your local bank or credit union. Once you have an account, you can deposit money into it, and then buy different types of investments such as stocks, bonds, or mutual funds. Stocks are shares of ownership in a company. When you buy a stock, you're buying a piece of that company. Bonds are loans that you make to a government or corporation. When you buy a bond, you're lending money to that entity. Mutual funds are baskets of stocks, bonds, or other investments managed by a professional. By investing in a mutual fund, you're getting exposure to a variety of different investments without having to buy them individually. To choose investments for your account, you want to find ones that have a high rate of return, which means they make you a lot of money over time. You also want to find investments that are low risk, which means they're not likely to lose a lot of value. There are many different types of investments available, so take your time and do your research to find the ones that are right for you. Some popular investments include the S&P 500, which is an index fund that tracks the performance of 500 of the largest companies in the United States. The Dow Jones Industrial Average, which is an index fund that tracks the performance of 30 large, well-known companies. And bonds issued by the US government, which are considered to be very safe investments. since they are rebacked by the full faith and credit of the US government. Once you've chosen some investments, you can buy them through your investment account. Most accounts allow you to buy investments electronically, which means you can do it from the comfort of your own home. When you buy an investment, you're making an offer to purchase it at a certain price. If the investment is available, your order will be filled and you'll own that investment. Investing is a great way to build wealth because it allows you to grow your money over time. When you invest, you're putting your money to work, which means it's earning money for you even while you sleep. By investing in a diversified portfolio of assets, you can reduce your risk and increase your chances of success. If you enjoyed this video, I highly recommend you check out another video I did recently about the #1 reason the rich stay rich. Until next time, remember that every dollar you earn has a choice on how it gets spent. Choose wisely.